So the government maintains its supply, it maintains its stimulus while we're waiting growth. The Federal Reserve, still uncertain about the American economy, can grow unaided, announced yesterday it will press ahead with its stimulus campaign of asset purchases and low interest rates. The statement contained no surprises, and the stock market edged slightly lower. The Fed was widely expected to continue adding $85 billion a month to its portfolio of Treasury securities and mortgage-backed securities, particularly in the aftermath of the disruptive partial shutdown of the federal government in the first half of October. The Fed maintained a relatively optimistic economic outlook in the statement, released right after the scheduled two-day meeting of a policymaking committee. It said the economy continued to expand at a moderate pace and that the availability of jobs continued to improve. But the Fed reiterated its blunt assessment that fiscal policy is restraining economic growth, referring both to enacted cuts in federal spending and the unresolved episodic standoff over the federal budget. The Fed also noted that inflation remains below the 2% annual pace it considers most healthy, and it said persistently that low inflation could pose risk to economic performance. But it reiterated that the expectation that inflation will rise modestly over the next few years. The decisions were supported by the 9 of the committee's 10 voting members. Esther George, the president of the Federal Reserve Bank of Kansas, dissented as she has done at each meeting this year, citing her concerns that the Fed policy might destabilize financial markets and lead to higher inflation. The Fed tightened security procedures for yesterday release of its policy statement, which is provided to news organizations under embargo about 10 minutes in advance of its public release. The embargo access is intended to improve the accuracy of news accounts of the closely scrutinized policy statement. Under the new rules, which restrict communication during the 10-minute period, reporters are required to surrender cell phones before entering a room at the Fed office where they receive the statement, and reporters must use the Fed's internet connection, which is shut off until the statement is published. Apart from that, the Fed changed the rules after investors complained about a spike in trading activity in the milliseconds before the Fed publicly released its September policy statement, which suggested that the information had leaked out earlier.